Hey everyone, as you probably already know, Cathie Wood is one of the most popular investment managers today. Arguably, she's the second most popular investment manager behind the Oracle of Omaha, Warren Buffett himself. Now, Cathie Wood has a certain investment strategy, and that is looking at innovative growth stocks that have phenomenal potential in the long term. The stock I'm going to recommend today is down 87% off its high and may not have that kind of phenomenal growth prospects longer term. I'm going to show you that in this video. So let's get right into it. Let's see what this stock is and let's see why I'm recommending this stock as a buy for 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the growth stock that I'm recommending that's down significantly off its high for 2024 is Zoom Video Communication. Cathie Wood has a 6.75% weighting of Zoom Video Communication in its ARK ETF. ARK ownership at 3.36%, the weighting in the portfolio at 6.75%. Now, let's look at why I think Zoom Video is a buy. I already mentioned that the stock price is down 87% off its high. That was reached in 2020. Of course, 2020 was a phenomenal year for Zoom. That's when everybody was learning from home, working from home, and everyone seemingly learned how to use Zoom Video Communication, and its software was extremely popular. The company generated significant revenue growth, profit growth. Everything was working well for Zoom so long as we were in lockdown. But then as soon as the economy reopened, Zoom entered into its difficult times. Or did it? Let me show you just how Zoom was impacted from the economic reopening, and it might surprise you. So here is Zoom's revenue over the trailing 12 months, and you can see there is no snapback. There is no drop down since the economic reopening. And you might be surprised at that, saying, wait a minute, we're not using Zoom nearly as much as we were in 2020, 2021, 2022. Now that economies are reopened and we're learning at school and we're working at the job site, sometimes we're working from home, but still we're not using Zoom just as often. Why is it that the revenue hasn't snapped back down? And that's interesting, right? The Zoom 4.5 billion in revenue over the trailing 12-month period, and the companies and enterprises and institutions that were using Zoom during the pandemic are probably still using Zoom today, just not as extensively, right? As a university professor, when we were learning from home, it was exclusively Zoom. I was using Zoom for lectures, for office hours, for everything I would do to communicate with students. I was doing it over Zoom. Now that we're back in person, my lectures are mostly in person. However, still, there are unique occasions when I deliver lectures over Zoom. For example, one week I had a cold and I didn't want to go to campus and possibly infect the students, but I also didn't want to cancel class. So I held lecture over Zoom. Also, sometimes students want to meet with me for office hours, but they don't want to come to campus. And so Zoom is what we use to meet in those instances as well. So again, we're not using Zoom nearly as much as we were in 2020, 2021, 2022, but we're still using Zoom. We're still using Zoom, and that's let the company keep its revenue. And I'm going to show you where the impact has come for Zoom, because it wasn't smooth sailing, even though the revenue stayed elevated. And that has come at the expense of its profitability. The operating profit margin is where you saw that big drawdown. And thankfully for investors, it snapped back up. It's jumping back up after the decline. Investors were worried, how much further is this going to fall? But the fall ended and now it's jumping back up. 5.04% operating profit margin, and it's still higher than where it was in the pre-pandemic phase of its business cycle. So it's still doing better than it was. But the market is pessimistic about Zoom. Let me show you the consensus estimates for Zoom. So here I have Zoom management guiding for adjusted EPS of $4.94 for fiscal year 2024, right? But the market is expecting Zoom to deliver $4.70 of EPS in fiscal 2024. So the market is behind what management is saying. The market doesn't think that management can deliver the EPS that management thinks they can. In fact, the consensus for fiscal year 2024 for Zoom is for revenue growth of 3.2% and for earnings per share to decline by 4.9%. So you could see the expectations are not out of this world for Zoom. It's not like the world is investors are expecting Zoom to perform this phenomenal growth in the next year. That's not the case. So you're not getting this stock with those expectations embedded. So if it was to outperform, if it was to grow faster than 3% or deliver revenue closer to what management said, then that's upside for those investing in Zoom stock. Another reason why I really like Zoom stock at this valuation is its cash flow from operations to sales over the trailing 12 months has turned around and it's at 32.44%. That's an excellent cash flow from operations to sales figure, and the trend is turning back upwards, just like the operating margin. And so that's good news for Zoom video investors that it stopped this decline, it's moving back upwards again, and the forecast for Zoom is not like you're paying for this expectation of it to perform extremely well next year. Zoom has also done this and they benefited during the pandemic and they used that to just make their balance sheet stronger. They didn't go out and make ill-advised decisions when their revenue was exploding during the pandemic. Therefore, they have $6.5 billion in cash and zero debt. They've got an excellent balance sheet. And finally, the stock is not expensive, trading at a forward price to earnings of 15.34. Now, I know next year the growth prospects are not excellent for Zoom, and so a valuation of 15.34 for a stock that's not going to grow that much is not that exciting, but consensus estimates were for revenue and earnings to accelerate the following year in 2025. So 2024 may be a transition year for Zoom, but the following year it's expected to return to growth. So for all of these reasons, I think Zoom Video Communication is one Cathie Wood growth stock that's down significantly off the high that I think investors can feel good about adding to their portfolios. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.